All right, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Today is the 20th of January 2023, and as usual, it is a Friday evening. So I think it has been, 1 week, okay, since I last did a Facebook Live, because last week was the Market Insights Virtual Summit. Okay, so I hope you guys had a great session for the 2-day summit. Okay, I hope you guys learned a lot of things from that summit. Okay, all right, so yeah, back to this Facebook Live again. All right, so if you guys can hear me loud and clear, all right, please say a hi to me in the comments or in the chat. Okay, this streaming is broadcasted to both YouTube and also on Facebook as well. So two simultaneously streaming to you. Okay, give me a hi, give me a shout out, give me a like, share, or comment, whatever it is. Okay, I really appreciate that. Okay, so I see, let me take a look at the comments. I'm very friendly. Okay, all right, Pokwi, Mark, CJ, Hadley, Dave, Ivan, Cyril, you are here, right? Emmanuel, so good to see every one of you here. I think we are just starting, so people are still streaming in. Okay, so give me a like, share, or comment. So there are, I think Cyril is asking, right? I think in one of the Facebook groups, hey, why am I still doing this Facebook Live when it is Chinese New Year, okay, or Lunar New Year, whatever you say it, okay? So in fact, for Chinese or Lunar New Year, it doesn't really make a difference to me. So to me, it's like, another holiday to me. And okay, I've really rested during the Christmas period already. So I feel quite refreshed. So it is just another holiday. And yeah, and the market is still open. I'm still happy to share with you guys. All right. So yeah, I'm quite happy to do it today to share with you guys. Okay, if you guys are willing to see me share lah. Okay, all right. So each one, Sora, Pei Wen, Wee Ling, Tiger Beer, Christopher, hi Alex, Birdman, HJ. Okay, so fantastic. So as you can see, all right, can see from this, the logo on your right hand side. Okay, see here. All right, this is proudly supported and sponsored by Philip CFD. Okay. All right. So I hope you guys are preparing, for your Chinese New Year. I hope everything is okay. I think the long weekend is here. I think you guys should be quite happy, right? Okay. So without further ado, right? So let me just add to stream over here. Okay. So let me zoom in. So disclaimer first, okay, as usual, disclaimer first, whatever I share today is just for education and information purpose. It is not a recommendation to tell you what to buy or what to sell. I think, okay, there are more people streaming in, okay, say Yulam, Vince, ZJ, Benson, Denise, okay, San, Chia Hong, Vincent, so good to see every one of you here. As I mentioned, right, so this Facebook Live and YouTube stream is proudly supported and sponsored by Philip CFD. Okay, so you have to support them. Just give me a few minutes, okay, to share with you, how you can take advantage of this Philip CFD, okay, and get yourself a free drink and also up to $88 in CFD trade rebates. So as mentioned over here, right, from now until the end of January, 31st of January, enjoy a free Playmate bubble tea drink, okay, and up to $88 in CFD rebates, okay, when you open a CFD account with just, okay, Philip CFD. Okay, no funding needed. You just need to open an account. All right, I'll post the link in the comments. All right, so if you're watching this on a replay, you can just see on your screen or the scrolling bar below over here. So this is what you will see over here. So and can see this banner, pretty nice banner, win a 3-day, 2-night staycation also. But the key thing is, okay, just open a Poem CFD account, all right, you get a free bubble tea and $88 in CFD trade rebate. So for example, you execute any trade, okay, all the commissions or everything, right, okay, up to $88. And okay, you stand a chance to be one of the lucky winner to walk away with a 3-day, 2-night stay at the Degree 15 Marina Sentosa Cove staycation that's worth $790 over here. So the mechanics for this staycation giveaway, right? Okay, it is over here. Okay, and this is the staycation, right? You just need to deposit a minimum. Let me try to zoom in. right? Deposit a minimum $1,000. You stand a one chance at winning for this staycation over here, all right? And if you actually execute, right, a CFD trade, right, you have additional 5 chances at winning this draw for this 3-day, 2-night staycation. So for those who just joined me over here, right, you're still early, okay? You're still in line for this promotion. I'll post the link in the comments over here. This is something over here, right? So just go through the open account, can read through the terms and conditions. Okay, basically there's not much T&C lah. Basically just open an account, no funding needed. You get yourself a free voucher for this bubble tea drink, okay, from Playmate, and just open an account over here. So just walk through with you, pretty straightforward over here. Okay, so everything is by right set to default already. Important thing is, right, you need to have this CFD account. All right, then you just continue over here. Let it load for a while. If you are a Singaporean, right, you can sign up with the SingPass, and just it will take very fast, within 5 to 10 minutes, and you are done. And if you are not a Singaporean, a foreigner, or whatever it is, okay, you can use up this online form, just take about 10 to 15 minutes to fill out the form, and you are good to go. All right, Ken. So that's all for now over here. And also want to let you know that, subscribe to our Telegram channel and also YouTube and Twitter as well. So I'll post the link in the comments over here. A lot of times, okay, sensitive price movers, news update, okay, trade ideas, okay, on Twitter also. So for example, the Telegram channel, so this is the Telegram channel. So not recently, just now, I know price mover on Netflix actually edge higher, okay, Roblox edge higher, Disney also edge higher, and Alphabet, okay, announces a 12,000 job cuts, joining Amazon, Microsoft, and Meta in cutting global headcount. So all these time-sensitive news, price movers, sometimes of the trade ideas, I also post in the Telegram channel. So right now, we have about near to 5,800 people, somewhere near there already. So do subscribe to our channel as well. So later I'll go through the Twitter where I share with you some of the trade ideas as well. Okay. So today, today I'll share with you where the equities market could be heading into the coming weeks. Okay, how to avoid getting sucked into the false breakout and late rallies. Okay, and which are the sectors continue to lead and which has the most vulnerability. Okay, if you are ready to go, okay, can you just type okay in the comments so that I know I can go ahead and start this session right now. And see that more people are tuning in. Okay, fantastic. Just tap okay if you think that everything is okay, ready to go, and see how the market is going for the next coming few weeks or so. Okay, thank you for your participation and your response. Okay, so if you at any point in time, if you enjoy my sharing, you find value, just give me a like, share, and comments as well. I really appreciate that. Okay, so sometimes after doing okay, I'll try to end this Facebook Live within 1 hour and 15 minutes. Okay, I try to do that. Okay, I know maybe you're in the Chinese New Year mood or such, and people are going for the shopping. See how it goes. But I try to do it within 1 hour 15 minutes. Okay, so as I mentioned, I'll still try to go it slow. Okay, slowly. So vision for the market-wise Asia. So when I first started doing this Facebook Live, my job is to really just to engage our subscribers, sharing my knowledge, because it's a win-win. Okay, if more people listen to my Facebook Live, YouTube streaming, new subscriber will go to the submit, and there'll be more sponsors willing to sponsor our events, and so get more revenue for the company and such. Okay, so at this point in time, I think after doing like, I don't know, 2 years, two and a half years, okay, so I getting the hang of it, and the vision that I envision for this, doing this Facebook Live is to really educate the public technical analysis. I realized that what is Singapore well known for. Okay, if you could, okay, just let me know what is Singapore well known for. Some of you might type that Singapore is known for its clean and green. We have very stable government. We have affordable housing. What else? We are highly efficient. We are educated. and such. Okay, we are financial hub. Okay, so a lot of things that we are, we respect intellectual property rights. Okay, we have what else? Okay, some of things. Let me know. Fine city. Okay, whatever it is. Okay, what is Singapore well known for? Financial hub. Mark say right. Financial hub. All these are the branding, right, that Singapore is well known for. So a lot of people, overseas people know us. Okay, so my vision for NWA is actually, in the future, when people talk about Singapore, I want to, kind of let them know that, Singapore is well known for, they have very good retail traders. Singapore retail traders know how to trade, and I really wish that, my Facebook Live, can help retail traders like you and I, okay, to become a better trader. All right, that's my ambition for you. So I really appreciate that, if you can help me, share out this Facebook Live to your friends, or, okay, if you are too shy to share, at least, okay, tell your friends or relatives who are into trading, tell them that there's this guy, Alex here, okay, who is doing Facebook Live or YouTube stream every Friday night, okay, to educate the people like you and you, okay, like you, okay, and I hope that, you learn something from all this Facebook Live, okay. If you actually learn something within this 1 to 2 years, okay, just type me in the comments, just type me in the comments if you really learn something, okay. Okay, I really appreciate that. So yeah, this is my ambition. So yeah, of course, you ask me, hey, Alex, what's the catch? Nothing is free. Nothing is free. Is it Mary said it's the best who is willing to share freely, right? So you ask me, what is my agenda? What's my agenda? If Alex know how to trade, why is he willing to share, so much to the public? Of course, I have agenda, okay. Nothing is free in the world. As I mentioned already, if people come to MarketWise Asia, people listen to our Facebook Live, there'll be more sponsors, okay, willing to sponsor our event, okay. More sponsors willing to sponsor our events, okay. The company make more money. The company make more money, okay. Then I also benefit as well. So whatever things that I can share, I share. Okay, whatever things that are, I want to keep it a secret, I will keep, okay. But I try to share as much as possible to you guys. All right. So I really hope that, let people know about MarketWise Asia, and you can be part of this community. Okay, All right. So enough rambling for 15 minutes already. Okay. So let's kickstart this session right now. All right. So I just want to let you know, okay, market is forward looking. So I mentioned many times in my previous Facebook Live that I said that, the stock market is not the economy. And I also share some of the reason why, normally when the before okay, the economy bottom, the stock market will start to rally already. Okay, so you need to remember, the stock market is not the economy. You cannot, use the current situation like, there'll be a recession ahead. The stock market is going to get, the economy is going to get worse, and then you use all these cents to trade the stock market. The stock market is always ahead of the economy. And of course, people ask, hey, how recession? How there are some of the fundamentalists that say that, no stock market low ended before the recession, so there could be more downside to come. So how? Okay, but okay, I'm gonna let you know that, before the recession comes, who knows? It could be 3 months later, as I mentioned, could be 9 months later, could be 1 year later, until the neighbor announced that there's a recession. Okay, within this period of time, what are you going to do? Are you just going to sit on the sideline and do nothing? Okay. All right, if you are doing swing trading meaning holding for a few days to holding about 1 to 2 weeks, maybe say 2 to 10 days, okay, there's still a lot of opportunities to be made in this market. All right, so for me, primarily is a swing trader, so there's still opportunity. Okay, you still can trade the market. Okay, all right, so and moving forward, right? Okay, how is this year going to do? Okay, but first we have to look back in 2022 over here. Right? Let me try to zoom that. Okay, right. So 2022, okay, what is the dominant theme over here? So 2022, what is the thing that is keep appearing on the headline? So what it is the dominant theme. Okay, of course, 2022 higher interest rate. So why do we have higher interest rate in the first place? So why do we have higher interest rate in the first place? Can you, engage with me, share with me what's the reason why do we have high interest rate in the first place in 2022? Okay. Of course, the answer is inflation, right? So inflation, hit I think about 8%, that kind of range. Okay, and that's why the Fed want to increase the interest rate. Okay, so that's the theme. Okay, but right now, if you have been following the CPI data, you know that inflation, okay, is starting to come down already. Okay, as I mentioned, the market is forward looking, so the market is anticipating what could come, okay, in this year. So what is the dominant theme, okay, for 2023 this year? So what are they anticipating? All right. So, okay, if you search for terminal rate, okay, or you listen to the Market Insights Virtual Summit, okay, or a lot of these our speakers talk about the interest rate, okay, talk about inflation rate, okay, and of course, okay, a few of them talk that the terminal rate where the Fed, okay, suggest that they will stop the inflation, as in they'll stop the interest rate at about 5.1%. So that is between 5 to 5.25%. All right, and of course there is this potential that the Fed might pivot, okay, which means that they'll lower the interest rate over here. So let me find the link over here. Can I see this? Do I have this? The rate hike probability, right, which I mentioned many times before also. So later during this year, all right, so the Fed could lower the interest rate. So until May, June, that kind of period, we are still going at about 5% to 5.25%. You can see that, in fact, in June second half, onwards, they are, the market is already anticipating that the interest rate can drop to 4.75% to 5%, and moving into, let's say, for example, third quarter, okay, yeah, and there's a chance that 4.5% to 4.75% until end of the year. Okay, what is the probability? Okay, it could be even 4% to 4.25%. So the market, it is already factoring in the drop in the interest rate. Okay, so this is market is forward looking. All right, so what can the what can the market do if they lower interest rate? Okay, what will the market do? So in terms of bonds, equities, USD, what will they tell you? Okay, so okay, as of now, the bonds market, okay, the USD, especially the US dollar, is already have a telltale sign that what the market is anticipating. Okay, I'm a bit ahead of myself over here, right? So let's go to the bonds market. So I mentioned, right, the 2023 terminal rate at 5.25%, and people are factoring in that, okay, the Fed will lower the interest rate in, okay, anticipation of a probable recession over here. So Jay said, why never do in Fortune Center? Okay, by the way, today I went to, not today lah, okay, in fact, I went 2 times already. Fortune Center really has a lot of good food to eat. Okay, so if you want, can go next time. A lot of good food to eat. All right, so lower interest rate, right? So let's go to the bonds market right now. So for the bonds, 20-year plus, interest bonds market, okay, TLT. All right, and you see that the TLT is like starting to go higher. Okay, in fact, it formed a low over here and then a higher low over here, and then starting to go higher. So you need to know that bonds and interest rate, they have a inverse relationship, right? So when the bond price, okay, goes up, all right, the interest rate will go down. So they have an inverse relationship. So at this point in time, last year, 2022, right, because the Fed, okay, is aggressively hiking, okay, increasing the interest rate. That's why the bond price, okay, keep going down. As I mentioned, inverse relationship, right? Okay. So right now, the market, it is kind of anticipating that this year, okay, the Fed, it is going to lower the interest rate, okay, potentially in the second half or in the third quarter. So market is starting to price in that already. So this is what the market could do. And if we add in my usual indicator as well over here, all right. So can you see that? For those who are new over here, this is the cloud indicator, Ichimoku cloud, and then the central pivot range over here, which are the green lines over here. Can you see that right now price has already broken above the cloud, which signals an uptrend, okay? And okay, price is above the central pivot range, okay, for 3 consecutive months right now, okay, which means that, you know, this is the first month, okay, price is above the central pivot range. Second month, CPR is here, also above the CPR, and this is the third month, okay, price is above the CPR, which means that there's a potential that, you know, we could have seen, okay, the low for the bond market over here, which is in November last year, and we are heading into a new uptrend over here. Of course, how high the market can go, the bonds market can go, nobody knows. But okay, which means that if the treasury bonds market continues to go higher, okay, bond price, which means that the interest rate, the yield is going to go lower. Okay, you understand what I'm trying to say? If you understand, just type OK in the comments. Just type OK in the comments. All right. And as I mentioned, right, USD, okay, what is the market anticipating in the USD, in the dollar market of the market, okay, for the urban equities market? So if you realize, okay, in last year, 2022, when the USD, it is going up, okay, the stock market, it is going down. So it has also a inverse relationship, right? So if you look at the dollar over here, dollar index, DXY, dollar index over here, okay? So ever since until late November, you can see that the dollar is already showing sign of weakness over here, and price right now is in a downtrend right now. Price below the cloud, below the CPR. Okay, you can see that price is below the central pivot range for 3 consecutive months right now. And if you looking into the higher time frame, the weekly time frame, okay, all right, we are nearing the support right now, which is somewhere near the 100 level. So I think there could be a little bit more downside to go for the USD. Of course, you know, we shall see how it goes, but on the daily time frame, I think it is clearly heading down. And if the USD continue to slide down, this will provide a tailwind for the equities market, because as I mentioned in 2022, okay, when the USD dollar go up, okay, the equities market tend to go down, and when the dollar go down right now at this moment in time, the relationship still hold, the equities market tends to go up. So let's try to see this relationship clearer. So this is the S&P 500 over here. I do a naked chart over here. If I add in the dollar index over here, the dollar index, new price scale over here, can you see that? Okay, of course, the red green is the index price, and the orange line is the dollar index. Can you see that it is a inverse relationship? Can you see that this is the year 2022 over here, somewhere around here? Okay, somewhere around here over here. Okay, so when the dollar index is climbing higher, the S&P is coming down over here. Okay, and when the market start to climb up higher over here, okay, the dollar index, you know, starting to go lower. So if the dollar index, you know, can continue to go lower, then of course, you know, we have the equities market should continue to go higher. All right. So so these are the dominant theme, okay, in 2023. It is still all about interest rate, okay, and the yield curve and the EU and such, okay. All right. So I covered this, right? So at this point in time, okay, I just want to ask you, right, to have some consensus, right? Right now, we have more than 200 people in the room, spreading across the Facebook and also on the YouTube as well. Okay, so let me know at this moment in time, heading into 2023, do you think the market is going to be bullish or do you think the market is going to be bearish? If you are bullish in 2023, just type bull, right? If you are bearish in 2023, just type bear in the comments. You think that, recession is coming, the market is going to go into another low over here, swing low over here to go even lower. So for example, like this, okay? Okay, you think that, this is just a dead cat bounce, okay? Our market is going to go down even lower in 2023, just type bear. You think that, we have already reached the bottom over here in October last year, we are going to hit high in 2023, okay? So just let me know, bull or bear, bull or bear. Okay, let me take a look at the comments right now. Stock God J say boo. Okay, Pei Wen say boo, boo, boo. Oh, a lot of boo. Okay, boo. Okay. William say bear. Rance Realtor say bear. Glenn say very bullish. Later half will be boo. Okay. Yu Yang say new. New is boo lah. Okay, bear. Depends on what comes out from the power mouth. Ivan said that. So in fact, I can see that a lot more boo. Okay. Okay, this is making me a bit worried. All right, or okay, or should I say that you guys are educated, okay, you know better than the rest of the people. The rest of the people are wrong and you guys are right, okay? I don't know. All right, so I can see that there are more bullish camp right now, okay? So for me, based on technicals, I am more gravitating towards the bullish camp. Okay, so I can't see so far ahead until like end of the year or so, but I think within the next few months or so, I think I'm more gravitating towards the bullish camp. Okay, so this is just my personal view. All right, of course, the fundamentalists, as I mentioned, right, they always say that, oh, no, recession is coming, earnings recession, whatever it is. Okay, I'm not so good in FA. Okay, and as I mentioned, they are saying that no bear market ends before a recession comes and such. Okay, there are a lot of 101 reasons why the market is going to be bearish. Okay, but for me, there are a few signs, technical signs that the market, it is actually improving right now. Okay, all right. So I think, okay, I'm going to share something new. Okay, in this new high minus new low over here. Okay, all right. Are you interested to learn this new thing? This one you might heard of before. Okay, but the tools that I'm going to using to show you more things, right, could be something new. I believe most of you might not have read it. Okay, so if you're interested to know, just type new in the comments. Okay, just type new in the comments. Percentage of stock above 200 days MA. If you have been following me, you should know. Advanced decline line, I talked a few times also. Okay, so the market breadth meaning that, the whole US market, okay, the whole US market, there are, I don't know, thousands of stocks, 8,000 stocks, 6,000 stocks, kind of, what is the overall market is doing? Because, if you are just looking at the main indices like the S&P 500, okay, it's just 500 very big stock, and these big stocks are market cap weighted. A lot of weight are put on the big caps like the Microsoft, Amazon, Tesla, Google, okay, all this. All right. So let's go through with them one by one first. Okay, why I think the market breadth is improving. This is based on hard data over here. Okay, so percentage of stocks above 200 days MA. So we're going to see, okay, out of these 500 stocks in the S&P 500, okay, how many percentage of stocks are above the 200 days MA? Okay, so this one the ticker sign is S5TH over here. So let me remove the indicator over here first. Okay, so this is the S&P 500. All right, if you add in the S5TH, this is the percentage of stocks above the 200 days moving average. You add into a new pane over here. All right, so you can compare. You can compare over here. All right, so can you see that the S&P 500 above, it has a very clear trend line. Okay, this is very clear. So price has been respecting this downtrend line. Can see, all right. But what do you see on the percentage of stocks above the 200 days moving average over here? While the price is making this is a low over here, right? This is a low, right? Can see, right? The breadth, okay, percentage 200 MA, it is making a higher high already. Can you see that? Okay, which means it tells me that, okay, beneath the surface, okay, don't talk about the big cap stocks like Amazon, Tesla, Google, and all this. Okay, the very big mega cap stocks is actually dragging the market down. The smaller cap, okay, in the S&P 500, like the mid cap, okay, overall, right, the rest of the maybe 450 stocks that are, the 450 stocks, S&P 500 stocks. The rest of the 400 stocks, 450 stocks, they are actually doing not too bad. Okay, there's divergence already. Okay, so this is making a lower low. Okay, this is making a higher high already. Okay, all right, Ken. So if you understand what I'm trying to talk about, this percentage of stocks above the 200 days moving average, right? Just type 200 in the comments. Do engage with me, okay? Do engage with me, because there's a reason why you should engage with me. Because if you like my content, or if you're new to MarketWise Asia, okay, if you like, share, or comment, okay, Facebook or YouTube, you think that, okay, you like my content, and in the future, okay, it will continue to show our content on your Facebook or YouTube feed. Because if you do interact with me, subsequently, you won't see MarketWise Asia on your content on your Facebook feed on YouTube already. All right, Can so far? Just type 200, or at least just engage with me. Okay, Ken? Right now, we have about 230 people in the room. At any point in time, just give me a like, share, or comments. Okay, so this is the first breath. I think that it is improving over here. Okay, the second breath, all right, which yesterday our stock got Jay Tun yesterday. In fact, Jay has a booster webinar session with us. Okay, he also mentioned about the Jay is here, stock got cushion. Okay, he also mentioned about this advanced decline line over here. Okay, so very simple. I'll remove this over here. So basically, the advanced decline line, the AD line is very simple. You're just comparing the number of stocks that is advancing, okay, versus the stock that is declining. Simple as that. So take the differential and such. Okay. So on TradingView, there's already a default indicator. Okay, so you add in the I think should add, how should I add? Okay, AD line over, AD line over here, right? Okay, so just add, you just search for ADL. So the advanced decline line, it's very similar to the percentage of stocks above the 200 days moving average over here. Okay, can you see that while the S&P 500 is making a lower low, okay, haven't break above here, the advanced decline line, okay, has already kind of broken above the swing high over here. Okay, can you see over here? So this is the horizontal line. Price has already broken this swing high over here, which means that, okay, there are more stocks advancing comparing to stocks that's declining. So this AD line, okay, is basically the New York Stock Exchange, I believe so. So it's across all the stocks in the NYSE, the NYSE, okay, NYSE Stock Exchange. Okay, Ken? So if this is clear to you, okay, you just type ADL in the comments again, right? Type ADL in comments again. So these two over here. All right, Ken. The third one that I'm going to share with you, it is new high minus new low. So you might have heard of this before. Okay, if you have heard of this before, the new high minus new low one, just type yes in the comments. If you haven't heard of it before, okay, just type no in the comments. I just want to have some idea how many of you know, how many of you don't know about this new high, new low thing. Wilson say no. Really? No? So many no? Junbo, so many no. Really? Payment also no? Okay, so in fact, this new high, new low, okay, new high, new low, okay, new high, new low, okay, it's also a breadth indicator over here. All right, so you can go and read it yourself over here. Okay, so I post the link in the comments. So basically, okay, yeah, a new record is a new high is recorded when a security prices reaches its highest level in 52 weeks. So basically, you're comparing, okay, the 52 weeks high, versus the 52 weeks low. Okay, all right, in a bull market, okay, 52 weeks high versus 52 weeks low. Okay, using your common sense, right? If we are in a bull market, okay, there should be new high, correct or not, Tiobo? There should be new high, right? In a bear market, okay, there should be new low, correct or not? Stocks are making new low, stocks are making a lower low, stocks are making a newer lower low. You can just search ARKK, okay, the Cathy Wood stocks and all this, okay, they are making a lower low. So 52 weeks high minus the 52 weeks low. So this is the basically comparing the differential between the 52 weeks high minus the 52 weeks low over here. All right. So in fact, I think the best representation for this, I think, is in stock chart. Okay, is in stock chart. If you are using a free account, that is fine as well. I'm using a paid account. I have a stock chart account over here. So the ticker symbol with a dollar sign over here is actually NYHL, New York High Low. Okay, NYHL, New York Stock Exchange High Low. Can NYHL. So dollar sign NYHL. Okay, and you can see nicely new high minus new low over here. Okay, and if you go in, all right, you see that, wow, simi sai, wow, what's this thing? Okay, this is not useful to you. Okay, this is just the day by day gyration of the new high, new low. And of course, these are some of my templates over here. Let me try to remove certain things over here. So I clear all here first. I clear all this. Clear all this first. Okay. All right. So this is still the new high, new low over here. What I want to do is to put in the, okay, you change to cumulative over here. Okay, cumulative. All right. Instead of candles, okay, you put cumulative over here. And then in terms of, you can put, I don't know, 1 or 2 year, 3 year, 3 year is fine. Okay, and then put to weekly time frame. All right, and then you add in a moving average, simple moving average. Okay, you can put 10. New click, update. So can you guys see? So this is a cumulative, the new high versus the new low. So we are adding the 10 MA to kind of give us a smoother line, also give us a signal line. Okay, all right. Can you see that? When did the market start to come down during this bear market? Okay, when? Last year, right? It is the start of the year, right? So Let me try to do this over here. Okay, naked chart. Okay, so last year, right? Last year, this is the start of the bear market. This is the 2022 last year at the top over here, right? So can you see in a bull market, price, then there should be new highs keep getting made, right? Stocks are going higher, go higher, go higher. So new high, new high, new high, new high, new high. Okay, until the new high start to flatten and start to come down again. So this is kind of, hey, the market, breath is not looking too good. It's not looking too good, okay? And it's starting to come down. You see, the new high, new low, it's come down. This is bear market, bear market, bear market, okay? And this was the 10-week signal line over here when price, the new high minus new low start to cross below the T10 MA. This is start of the downtrend over here. And right now, the new high minus new low cumulative is starting to break above this 10 MA again, which means that, okay, again, this tells us that, the new low is not getting made anymore. The stocks are not making new lows anymore, and it's starting to form, making new highs, okay, new 52 weeks high. All right, I hope you guys understand what I'm trying to say. So this is one thing you can look at here, okay? And if you add in another method is, okay, add in the price over here using a histogram to give you another data, okay, another data visualization over here. So you choose price over here. So once again, all right, you can put NY HL, New York high low, right? If you are using a free account, then you cannot change that, okay? All right, so on the right hand side, if you're using a free account, you cannot change that. You change to histogram, okay? Then you just click update. Of course, this is on weekly time frame. So, you can see that it is really not making new low anymore. Okay, it's not making new low anymore. So, in September, mid-September, there's very bearish. A lot of stocks are making new low. You can see that it's starting to go higher already. Okay, if you want to have a better representation, okay, you can go to, let's say, for example, 1 year, okay, and go to daily time frame over here. Just click update. Okay, can you see that, along the way, the stock market is going down in 2022, okay? And then right now, it is starting to, make the new high again. It's starting to make new high again, all right? So do you understand what I'm trying to say? Is this something new to you? Is this another tool that you can use in your toolkit, in your arsenal? If this is something new to you, okay, just type new in the comments. Just type new in the comments. This is one way. So I going back to the weekly one. So you can switch to weekly years 3. Okay, under the type cumulative, then you put update. Then this is the market breadth is telling you that the stocks are starting to make higher high, starting to make new high. Okay, all right, something new to you, right? Okay, I hope this is something new. You learn something new from me once again, and be an educated trader over here. By the way, okay, I want to give credit to some of these Twitter's financial FinTweet. So I also learned from them as well. So this is one of the tools that I use. I learned from them as well. Okay, so this is the new high minus new low cumulative. It's very important, cumulative. Okay, it tells us the story over here. Okay, so right now we have about 230 people in the room. So let me just do a very quick announcement or some sharing of promotion over here, because I think just now lesser people, now a lot more people. Okay, all right, so as you can see from the banner over here, this Facebook Live is proudly supported by Philip CFD. Okay, all right. So right now, from now till the 31st of January until the end of the month, okay, you can enjoy a free Playmate bubble tea drink, okay, and up to $88 in CFD trade rebates when you open a CFD account with Philip CFD, okay. No funding needed. You need to just open an account. So this is the link over here. I'll post the link in the comment. So this is the link. I will post it here. So this is what you see on the page, okay? Open a new account, okay? No funding needed. You get a free Playmate bubble tea. And if you make any trades within until the 31st of January, all are rebated, okay, until the $88. And, okay, if you decided to fund at least $1,000, you stand a chance to be a lucky winner, okay, to walk away with a staycation at 1 degree 15 Marina Sentosa Cove that's worth, okay, $790, okay. And, okay, if you decided to make a trade, a CFD trade, okay, you have more chances at winning, okay. If you execute at least one CFD trade for an additional 5 chances at winning the draw. So just click on opening the account. Okay, it is by default because this is a special link from MarketWise Asia, all set up. But just to make sure that it has to be a Philip CFD account. So this CFD has to be checked. Okay, and then just continue over here. And if you are a Singaporean, you can make use of the SingPass to open the account in a double quick time over here, right? With SingPass. If you are a foreigner, okay, you can sign up using the online form over here. So one last link over here. Okay, this is the CFD account link. I post a link in the comments. So, okay, FAQ. Okay, for those who already have a Philip CFD account, so what should you do? It is okay. If you want to take advantage of this promo, right, you just need to open another account. Yes, that's right. Okay, you can have multiple accounts in Philip Securities. So just open another new account. Okay, no funding needed, right? You can enjoy this free bubble tea as well. So, you know, free one, 不拿白不拿. So they already spend the marketing budget already. So get the CFD account with them and get your free bubble tea and enjoy your Chinese New Year. All right, Can, okay. So this I talk about this okay, new high minus new low. So this is the market breadth is overall improving. All right, and I also need to tell you that, okay, the RSP, which is the equal weight S&P 500, okay, mid cap, small cap, Russell 1000 equal weight, okay, they are all above the 200 days MA. All right, so what is RSP? RSP, for those who have been with me for some time, I kept mentioning this. RSP is the equal weight S&P 500, right? Because you need to understand that the indices that you are looking at, the S&P, okay, the Nasdaq 100 and the Dow. Okay, Dow is price weighted, okay, but the S&P 500, okay, or SPY, okay, the ETF, they are all market weighted, which means that the bigger company has a lot of weight on the index. So I also mentioned before on this, okay, this slick chart over here. So slick chart, S&P 500, the weight analysis, okay. For those who are new, I post the link once again in the comments over here. Of the 500 stocks, okay, all right, 50 stocks, okay, already accounted for 50% of the weightage in the S&P 500. So as I mentioned, okay, the S&P 500, the companies, the bigger company can influence the market, right? So as the Apple, okay, 6% weightage, Microsoft 5%, Amazon 2.5%, okay, very high weightage. So which means that within these few days, okay, let's say Apple, Microsoft, Amazon, okay, Alphabet all move up, okay, there's a very high chance that the S&P, okay, will move up as well. All right, and so the RSP basically it is just giving, okay, to keep things simple, all right, is just giving 0.2. Oh, no, cannot write. Okay, 0.2% weightage in each stock. I don't care whether you are Apple or you are XYZ, the last one in the S&P 500, you are just given 0.2% weightage. Okay, can all right. And then these are IJH. Okay, IJH is mid cap, small cap. EQAL is Russell 1000. Okay, so Russell 1000 is the top 1,000 stocks in, okay, it's the top 1,000 stocks in the whole US market. All right, it's a subset of S&P, it's a subset of SPX, S&P 500. Okay, so which means that for Russell, okay, I think I need to write clearly. Okay, so for Russell 1000, okay, 1000 needs to be lagging my com, okay, and SPX, okay. So for Russell 1000, the S&P 500 is inside as well, because S&P is the top 500 mark, right or not? So Russell 1000 is the top 1000. So S&P is a subset of this Russell 1000. So Russell 1000 is the S&P 500 plus another 500 stocks, additional 500 stocks to make it Russell 1000. All right, which means that, okay, Russell 1000 is by right is also a market weighted index, but this EQAL is a equal weighted Russell 1000. So all these are above the 200 days moving average. So I add in the moving average over here. So okay, many lines over here. Let me try to remove this. Remove this. Hide settings. Okay. So the red line that you are seeing right now is the 200 days moving average. So, you know, typical in the TA, technical analysis, okay, general consensus is that when price is above the 200 days moving average, okay, the market is in a uptrend. Okay, equal weight, RSP, okay, price is above the 200 days moving average, okay, all right. IJH, okay, it is also above the 200 days moving average. IJR, small cap, is also above the 200 days moving average. EQAL, Russell 1000, equal weight, okay, it is also above the 200 days moving average. Previously, okay, the Nasdaq 100 equal weight, okay, was above the 200 days moving average, okay, but for the past 2 days, it went below the 200 days. But today, okay, today it is above the 200 days MA. Okay, so it's a bit choppy for the Nasdaq equal weight. Okay, for the Nasdaq equal weight, it's actually QEW. Of course, EW is the equal weight lah. So it is today. So add in today, if nothing changes, okay, RSP, QQ, EW, okay, all are above the 200-day moving average, which means that beneath the surface, okay, all right, the stock market is not as bad as it seems. All right, if everything is clear, all right, just type the letter C in the comments. Clear, letter C. All right, it is something useful to you, okay? Wow, 1 hour already, jialat. I haven't finished talking. Can give me some more time or not? Are you guys interested to know more? Okay, so clear. So these are the technicals that things are improving. So, okay, moving there, how to avoid getting late to the party. So one of the key things in this Facebook Live is how to avoid, you know, getting sucked into this false breakout and the late rallies. So let's look at the S&P 500 futures. Okay, naked chart over here. Move this okay, so previously, how to avoid? So, you know, how should I put that? Okay, let me organize my thoughts first. All right, so prior to that, when the market is actually, kind of doing sideways, the S&P, as I say, S&P 500, it is just the market weight, okay? And price ping pong, okay? At the end of December until the start of the year, okay? And then it's only like okay, the 10th or 9th of January, okay, then price started to surge higher. All right. And this is the time when price started to move higher. Then you can see that, wow, a lot of, traders starting to see, wow, can the market go higher? They are getting more bullish and such. And then they get sucked in, they buy, okay. And then, okay, the market start to come down. And a lot of times, okay, they buy into many of the very popular stocks. So the market come down as well. But, okay, beneath the surface, I'm glad you know that, I already started to enter somewhere around late December or mid-December to very early January. So while the market is like doing sideways consolidation, okay, I have a lot of setup already. Screening, there's a lot of setup already. So as I mentioned over here, right? So, okay, how to get more getting on? So, you need to have a good screener, all right? So when you screen certain stocks, right, are there many setups appearing? Okay, all right. So I can share with you the one that I'm using is actually the marketinout.com. So this is a very good technical screener over here. So you do my stock screen over here, okay, then you can see that a lot of things are over here. Okay, all right. So can screen a lot of things and such. Okay, now these are not the most important one. Can see a lot of screening over here. So when I do some screening over here, right, are there many setups appearing? Okay, so a lot of positive setup means that, hey, actually not too bad. A lot of things are potentially, going higher. You get what I'm trying to say or not? Now, while if there are no setup, okay, or in fact they are short setup, then the market is not too good. So during this period of time, there are a lot of bullish technical setup over here. So that's the reason why, okay, while the market hasn't moved, I already started to position then the market move, right? While the market move, right, okay, my position, in fact, move even higher already, okay? And then I'm starting to scale out or even to exit my position already. By the time, right now, at this moment in time, I only have 2 positions left, okay? In fact, one of them is Tesla, and I'm still in profit, okay? So I'm still perfectly fine. So you get what I'm trying to say or not, okay? So screening, how many setup you can see is quite important, okay, to avoid getting sucked into this rally and such. So and for me personally, I don't like to trade breakout. Okay, so over here, so I'm trying to do for you. All right, so online, there are a lot of group of traders, like for example, Ken Slim, Mark Minervini style, that kind. They like to trade breakout. Anyway, if you don't know what is Ken Slim, you don't know what is Mark Minervini kind of setup, okay, not important, but basically, stocks trend like this, right? Correct not? Trend like this, right? So they tend to do breakout trade. So they enter here, then they trade a breakout, okay. Then they trade a breakout over here, okay, and then they trade a breakout over here, okay, and they trade a breakout over here, that kind. So personally, I am not that kind of trader. And in 2022, a lot of breakout fail, okay, because it's bear market as well. And personally, I am the pullback trader. Okay. So when the market is surging, okay, I don't like to chase one. Okay, you can put it in your watch list. Okay, and then when the market pullbacks, I will look for potential here, and then I will enter somewhere around here. All right, when the markets go higher, hit somewhere around here, I might decide to exit, okay, or throw my profit or hold whatever it is. Okay, I am already in a profit already, so I'm in a better position to hold. So once again, move higher, pull back over here. Okay, I wait, pull back, I enter somewhere around here. Okay, maybe somewhere around here, I take profit. Okay, can understand? If you understand what I'm trying to say, okay, on this pullback thing, okay, just type pullback in the comments over here. And all right, so getting stuck into false breakout, don't buy into the breakout lah. Very obvious. Late rallies, okay, again, how you screen your stock is very important. Do you have a lot of setups or not? Okay, if there's a lot of setup or the market is not moving, then this can tell you that hey, the market it is not as weak as it seems. All right, so the leading sector and industry, okay, anybody can give me some answers. What are the leading industry right now in the market? Okay, without checking the ETF screen right now. Right, let's go to ETF screen. Young say yes, kind of a swing trade. Okay, swing trade, yes. I'm primarily a swing trader. So go to this ETF screen. Okay, let's check together. Okay, what I'm sharing is exactly what I'm doing behind the back. Okay, I'm also doing this as well. Go to performance over here. Try to zoom in. Go to short fund, type no. Dollar volume, I tend to put 500,000. Okay, and then right column. Right column. It's a bit laggy. Sorry about that. Okay, you put year to date. There's a YTD over here. Then you just update picture. Okay, so you can see over here on the right hand side over here, year to date, you sort according to the best year to date. And this could give us a clue. Okay, all right, so what do you see in this list right now? Okay, can see or not? I think you guys can see. Can share with me what do you see? What do you see? What do you see? What do you see? Of course, you know that Jay mentioned in the portfolio trading momentum, right? The best performance stocks, okay, tend to continue to go higher for the rest of the year. All right. Basically, okay, it is the same for the sectors and industry as well. Last year, you can see that a lot of energy industry sectors, they are moving higher. So it tends to continue for the rest of the year also. So for this, you can see that, our blockchain recently is not too bad. Of course, Bitcoin is rallying. Jets is this airlines, and then China, online retail, ONLN, rare earth, copper miners, okay, emerging markets, okay. Then you can see that, what else? Mexico, emerging markets, okay, all these are moving pretty well as well. The gold miners, clean energy stocks, still the commodities are coming back, okay. All right, so for example, like Jets, okay, Jets, you can take a look at the JETS, okay, this is the airlines, Jets, okay, you can see that, wow, can you see that it's surging, okay, it is surging, okay, it is surging. So like, for example, the component stock, like for example, like UAL, United Airlines, okay, is also surging. So these are the sectors that, you might want to take a closer look. We are nearing towards the end of the month already. So this potentially, okay, could continue to go higher for the rest of the year as well. Okay, and you can see that some of the copper miners, GDX. Did I see GDX here? Search. Okay, GDX, gold miners, silver miners, and such. So let me show you this. So seasonals wise, okay, so you can take a look at this is also from stock chart, over here. So I am going to lay out here. So this is the seasonal data over here. By the way, this is a paid indicators from Larry Williams. This is not free, so you won't get it even if you are paid stock chart subscriber, you need to buy this. Anyway, all right, so let's say, for example, GTX. All right, this is the gold minus over here. All right, so you can see that, okay, for gold minus, right, by right now in the early of the January, seasonally it should be weak. But it is continued to surge higher, and okay, we are heading into February to March, which based on seasonal data, historical data, seasonally, okay, typically from March to February to March, the miners are pretty strong. Okay, the miners are pretty strong, which means that there could be more upside ahead for the miners industry as well. Okay, so you might want to take a look at that. All right, Ken. So in fact, last week, okay, I talked about at the start of the year, I talked about China EEM, emerging market. Okay, the social media is all moving pretty well. So like EEM, this EM, emerging market, okay, I think this is the year for the emerging market, right? It's starting to go much higher as well. If you add in my usual indicator over here, okay, you can see that emerging market, okay, has been performing horrendously for the past 2 years or so, okay, and then price is starting to break above the cloud. All right, 3 months, okay, above the central pivot range, and then price can continue to go high potentially. But as I mentioned, right, I don't like to chase lah. All right, so there's a pullback. I want to wait for a pullback before I enter again, that kind of thing. All right, instead of something interesting, value to you, you like it, okay, please give me a like, share, or comment. So everything is okay so far. You like it, okay, just type yes in the comments. Just type yes in the comments. Okay, we are into 1 hour and 10 minutes. Okay, just give me maybe another, I don't know, 10 to 15 minutes of your time. Okay, is it okay? All right. So, okay, as I mentioned, right, so all these are, the strong industry, the strong sectors as such, right? So, all right, yesterday, in fact, Jay shared with you this offer as well. He actually attended his webinar yesterday, right? He has this, the art of explosive profit. So, basically, I'm also inside the group, be it stocks or ETF as well, okay? When the price has started to move, okay, how are you going to chase it? Okay, when to enter? Sometimes when it trends very nicely, okay, like for example, like this EM, okay, right? So let's say, for example, you don't want to wait for a pullback, okay? You think that there can be more upside to come. So how do you chase over here, right? Maybe somewhere around here. How do you enter? Somewhere around here. How do you enter? This AAP program teach you, okay, the method, okay, how to enter into these strong stocks as well. So as Jay mentioned yesterday, right, it is a 45% off. Usual price is 897. Now it's only 497 if you enter this discount code over here. So if you are still sitting on the fence, okay, all right, you may want to take this opportunity. And I respect Jay a lot. He know his stuff. He really trade, and he has an uncanny ability, to catch the right stocks at the right time. So if you really want to know how he really trade that, then this course is for you. And by now you should know that this the Market Insights Virtual Summit. Okay, the some of the speakers, they do have courses, they do have offers, right? Okay. Yes, and I believe in them. Okay, their courses are really good. Okay, you should take, and it is not costing you an arm or a leg lah. Okay, it is not 4997. It is just 497 only. Okay, all right, and it's going to benefit you and give you a multiple returns. Okay, in time to come, within the next year or the next few years, multiple returns definitely. Okay. For me personally, I like this wash and rinse trigger. So if you actually watch Beanie, you have this wash and rinse trigger. So later I'll go through everything. I'll go through that. All right. So just give me some time, okay? Maybe until another 15 minutes, okay? So let me go through some of the trade ideas that I mentioned with you, right? So as I mentioned, I will share with you, some of the things that I entered, and it is all inside my Twitter feed. Okay, it's on my Twitter feed. So for those who are still new to me, please follow my Twitter feed. So the things that I post on Twitter, it is different from the YouTube, different from Telegram channel as well. So for the Twitter, right, it is more, it is acting like a trade journal, at the same time sharing with you what I see in the market, okay, and yeah, and some of the trade ideas as well. So for those who are inside, okay, if you enjoy this, okay, let the people who haven't followed me on Twitter, okay, know that you enjoy my Twitter content over here. So let's go through some of them over here. This is NZDCAD. So let's go through. So yesterday, okay, yesterday I mentioned that in fact, the intraday, this breadth advanced decline, okay, is showing divergence, while the market, it is actually, pretty flat, okay, going down. The advanced decline is not too bad, okay. The tick cumulative is actually going higher. All right. So these are things that I mentioned. Okay. Aussie franc, Aussie franc. Okay, so AUDCHF, right? I mentioned that, hey, this was I posted in 2 days ago. Okay, January 18. By the way, you need to know that in Twitter, you cannot edit. You cannot edit the post. Once you posted on Twitter, you cannot edit unless you delete it. Okay, so this already posted there already. I said, hey, Aussie franc is hitting the central pivot range and such, okay, as any resistance price can come down. So Aussie franc, okay, so AUDCHF, okay, Swiss franc, it came down over here. Can you see it came down over here? All right, it came down over here. So I exited profit. And someone asked me, right? Someone asked me over here. Someone asked me, okay, it has indeed went down further. All right, any target price in mind? So I mentioned that 6302 at the monthly pivot, but might not reach there. I don't know, because I have seriously no idea whether it reached there or not. So I will trade accordingly. So AD Aussie Swiss franc. Can you see that? this is the monthly pivot, right? All right. So price hit exactly there. Okay. The low is 63001, right? 63001, okay, and then rebounded over here. So I exited at the monthly central pivot range there. So this is one case study over here. All right, and then go back to my tweet over here. Let me share with you my Twitter link. So please don't post over here. So go and follow it right now. What else? Right. So seasonal wise, I mentioned that we are in a period of weakness. So until about next week or so, typically, January is from now until 27th of January is a slower month over here. Okay, and what else do I tweet? Okay, on the January 4th, I mentioned that this EPI, Wisdom Tree India Earnings Fund ETF, basically it is an India ETF. I mentioned that it is a strong seasonal post between the 4 to 19 January. Over already, right? 4 to 19, right? It has been up 10 years for the past 11 years. All right, so let's go to EPI. Take a look. EPI. So we can see that I entered this. It is not on high side. So I entered here. Price went up pretty nicely over here. I also exited my EPI there. All right, it's not too bad. But I need to tell you, not all the things that I entered, I share on Twitter, I will enter all. Some enter, some are not enter, okay? All right, so this is just for you to take a look, all right, Ken? All right, and if you realize many of these trigger that I enter is based on a wash and rinse trigger. So this is, okay, this is a wash bar over here, okay, and then this is a rinse bar over here. I enter over here, okay, with the seasonals, to back me up, okay, this is not too bad. This is the AUDCHF, right? Okay, This is also based on wash and rinse as well. And Tesla, I mentioned, right? In fact, Tesla over here on the 28th of December, 28th December here. So Tesla, a near vertical sell-off. My star reversal signal showing previous signal show. If you go long, you are buying into a strong momentum now. So I hinted that there could be a potential reversal. Of course, I don't know at the point in time. I do not know. Potentially, I think that is a good risk to reward ratio over here. Okay, so Tesla. So we go back to Tesla over here. Tesla. Okay. Can you see that? This was the pretty low over here. I bought somewhere near the low over here, and then price rebounded. So I'm still holding on to Tesla as well. Okay, and then what else? So I can see that I'm going into chronological order. All right, and then this is not this, and then stronger stocks I mentioned before. Okay, RSP, QQEW, mid cap, small cap, Russell 1000, they are all above the 200 days moving average. All right. Okay. Coca-Cola. Okay. This one, very lucky I didn't enter. So if I enter, this will be a losing trade. So I mentioned that, Coca-Cola KO is at a yearly pivot. Okay. Right. So somehow I just didn't enter this, okay, because I already had a few positions in hand. Okay. But yeah, continue to go down lower. So I expected price to go higher, but I didn't. All right, and this is price coming down, which is good as well, because you understand that Coca-Cola is actually a defensive stocks. They are consumer staples. So if the consumer staples, the utilities, they are going down, right, and the more risk on sectors are going higher, that is a good sign for the overall market as well. So this one, very lucky I didn't enter. Okay, all right. This one, TBPH. Okay, I'm still in a position. All right, TBPH, I'm still in position. This is a biotech. TBPH. Okay, still in position. Okay, still pretty flat right now. Okay, I'm still pretty flat. Okay, so this is also based on a wash and rinse entry. And then SRPT. All right, I posted all this on the January 11. Okay, Sarta Therapeutic. So don't know what is it, but it's a biotech industry. Right, I show you because it is, relative strength, 3 month, 6 month, good RS, healthcare, supported and central pivot range. Okay, this is the SRPT. Okay, study over here. So can you see over here? I entered on this day over here. So this is a wash bar, and then no. This is the wash bar. I repeat, okay. This is the wash bar, and then this is the rinse bar over here. So all these are based on Bini wash and rinse method over here. So wash and rinse method has become my cornerstone, okay, the key on how I trigger into an entry, okay, wash and rinse. So what else? Go back to my tweet, case study over here. Not this. Tesla, I'm holding. EPI, I'm holding as well previously. Talking of Tesla. XME, okay, this is the metals and metal mining. Do you see that before the strong move, I already started to enter into XME. Okay, this is the metal mining over here. So I entered somewhere around here. XME, right? Very sweet one. So this is also a wash bar over here, and then the rinse bar over here. So I enter. All right. So and then, okay, and just continue to go high. I didn't exit here lah. Okay, somewhere around here I exited already. So my risk to reward is about 1.5. Okay, and then all these are posted beforehand. January 10. All these and then HSI. I need a lot more lah. Okay, you can go through it yourself over here. why cannot? Never mind. Another one. Okay, you can go scroll through my Twitter over here. Don't know why cannot scroll now. Okay, another one is ASHR. Okay, search for Alex. You. Can you see over here 28th of December? All right. So I mentioned about this China A shares, ASHR. Okay. I say that, supported above the cloud and such. Okay. You can see that ASHR. All right. It just, went higher. Also, once again, all right, it is based on the, this is a wash bar over here. Okay. And then a rinse bar over here. Okay, I enter. So once again, you might know, see me see wash and rinse. I do know the method. What's that? Okay, this is based on Beanie's learning over here. So this is the alien wash course lah. Okay, she also mentioned during the summit also. So go to the link over here. You go to the link over here. Okay. Anyway, whether you decided to join or not, okay, doesn't matter. All right, because she is giving you a free trial, and also she will conduct a wash and rinse bonus webinar. So she'll share more with you what it is the wash and rinse, and also can download this automated the alien wash indicator. So it's automated kind of trading using MT4, right? So just click on it. Okay, you're registered for this webinar. So it's on the 30th of January. Trial period until 15 Feb. So you need to if you want to have a trial, okay, right, you need to register for this. Again, to me, whether you want to use the software or don't use the software, not important. I think the key thing is you need to know what is wash and rinse. Okay, what is wash and rinse? And this is again the key cornerstone how I enter into the market, like using all this. Okay, all right. So you can take a look at such. Okay, and can I go down low or not? Cannot. Let me see. Let me try to scroll down again. This one, okay, of course, not all I entered are profitable. Not all I entered is profitable. Okay, some are losing trade, okay. All right, which I share with you, this is not so good now and such, okay. All right, and then some Hyatt, okay. Hyatt Hotel is also one of a very good trade over here. I mentioned on the 30th of December. Do you realize that I mentioned, right? You see, there are don't know what happened. Okay, there are a lot of setups in the late December to early January. So Hyatt Hotel, okay, I should mention that, hey, this is a wash and rinse pattern over here. Okay, I didn't mention wash and rinse, but I mentioned that, relatively strong and such at the support right now. So you can see that Hyatt Hotel, okay, boom, okay, can you see that over here? Overall, then just go higher over here. So this is also this is a wash bar, and then this is a rinse bar over here. Okay, all right, and it's supported at the cloud. So a lot of things that I mentioned here, I'm using myself lah, the cloud and the CPR and such, plus the wash and rinse trigger. So what is the link again for the wash and rinse? Okay, you can go over to the link over here. Okay, William. So Faith is asking, do you post your, not prediction, I'm just sharing with you what I wouldn't say this is prediction, okay? Right, so I didn't share on TradingView, so this is all on Twitter. So if you don't have a Twitter account, if you like what I'm sharing right now, my content on Twitter, go and open a Twitter account and then just follow me. Okay, Elon Musk is also inside. I'll post the link in the comment. Can all right, so I basically covered a lot of things today already. What 1 hour and 30 minutes already. Okay, I think should be fine for now. Do you enjoy the sharing today? Do you enjoy, the content, you find value in my sharing today. If you liked it, please give me a like, share, or comments. If you enjoyed it, okay, type value in the comments. Just type value in the comments, okay? And one last thing before you go off, we have this promo, okay, sponsored by Philip CFD. Just enjoy a free Playmate bubble tea, okay, up to $88 in CFD rebate, okay? Go to this link, Philip CFD over here. I'll post in the comments over here. All right, get the free bubble tea, open an account, no funding needed, no funding needed. All right, and yeah. And yes, so any other question? Maybe I can answer maybe one or two questions before I call it a day. All right, so follow me on Twitter, very important also. Okay, follow me on Twitter. Right, of course, also Telegram channel lah. That's the best lah. Okay, Ken. Hey, Happy New Year. Okay, yes, thank you very much. So I think with that, if there are no questions, I think it's getting late. I really hope that you enjoy my sharing, share to your friends, build this community. Okay, really want to educate the public that we want to be Singapore, really to be we have smart retail traders. And you learn from Alex. Alex share with you all this before. Okay, be part of the community. Can go and like, share, or comment on this Facebook streaming, also YouTube streaming as well. Okay, so I think thank you so much. I think tomorrow is 除夕夜, Chinese New Year Eve. Okay, have a good reunion dinner, and I wish you a very happy New Year. 身体健康 very important. 身体健康心想事成。身体健康 win everything else. Okay, 新年快乐，身体健康 and 万事如意. Okay, I think with that, thank you so much for staying with me, and I will see you next week also. I don't know, maybe next week. I might not do a Facebook Live. Okay, see you again next week. Okay, Happy New Year. Okay, thank you and bye bye.